If you're thinking about selling your home, at some point someone is going to bring up taxes. And honestly, it can feel really confusing, really fast. So today I just want to simplify it. No complicated numbers, no tax jargon. Just a clear, plain English explanation of what you actually need to know and the right questions to take to your tax professional. I'm Corey Reels, and I've been helping family with their real estate goals for over 11 years. 4 years ago, my family and I relocated to Chula Vista, and we fell in love with this community. The neighborhoods, the people, the local businesses. It's why we're so passionate about helping families find their place in San Diego County. Disclaimer, before we dive in, I am a real estate professional. I am not a tax professional. Everything in this video is for general education only. Your situation is unique. Always talk to a licensed CPA or tax advisor before making any decision. That said, let's make this simple. All right, so section 1, do I even owe taxes? This is the first question most sellers ask, and the good news is, well, most people don't owe any tax at all. Here's why. The IRS gives homeowners a really generous break. Think of it like a thank you, a gift from the government for living in your home and paying your mortgage, okay? Here's how it works in plain English. If you've lived in your home for at least 2 of the last 5 years, and it's been your main home, not a rental, not a vacation house, then the first chunk of the profit is completely tax-free. Now, if you're single, that's the first $250,000 of the profit, tax-free. If you're married, that's the first $500,000 of the profit, tax-free. Now, let me put that in real estate numbers. Say a family in Eastlake bought their home for $500,000. Today, it's worth $850,000. That's a $350,000 in profit. And if they're married and it was their main home, they owe 0 federal tax on it. 0. Great news, right? That's a big deal, and a lot of sellers don't realize it applies to them. Question to ask your tax professional. Do I qualify for the home sale exclusion, and how much of my profit would be tax-free? Now, section 2, what if I made a lot of money on my home? Well, there's good news for you. Now, some sellers here in San Diego have owned their home for 15, 20, even 30 years. And the home values here have gone up a lot, like anywhere else. So sometimes the profit is bigger than the tax-free limit. So if your profit goes above the $250,000 or $500,000 mark, the amount above it may be taxable. Simple example. Sold your home for $1.2 million, bought for $400,000, profit $800,000. Marriage exclusion minus $500,000, taxable amount $300,000. Hope you're keeping up. The $300,000 could be subject to tax. How much exactly? That depends on your income and your tax situation. Here's the California part. This is important for us locally. California taxes this kind of profit as a regular income. That means it gets added on top of everything else you've earned that year. This is exactly why talking to your CPA before you sell, not after, really matters. Questions to ask your tax professional. If my profit is above my exclusion limit, how much do I owe? How does California treat this compared to federal taxes? What tax bracket would this put me in? Section 3, can I lower the amount I'm taxed on? Well, that's a great question. Here's something a lot of sellers don't know, and it can make a real big difference. The profit the government looks at isn't just what you sold it for minus what you paid. They also give you credit for money you put into the home over the years. So think of it this way. If you spent $20,000 redoing your kitchen or $15,000 putting on a new roof, those aren't just improvements to your home. They can actually reduce the amount of profit that gets taxed. That's great news. Things that do count. Kitchen or bathroom remodel, new roof, room addition, new HVAC system, upgraded flooring. Things that typically don't count. Here we go. Routine repairs, painting, and normal upkeep. So if you've made improvements over the years, even years ago, try to dig up those receipts. A folder of invoices or bank statements can generally save you a lot of money when it comes to selling your home. Now, questions to ask your tax professional. What home improvements can I use to reduce my taxable profit? And what record do I need to bring you? Section 4, one local thing San Diego sellers should know. Here's something specific to us in San Diego County. When you sell a home, there's a small tax called a documentary transfer tax. Right now, it's pretty minor. On a $700,000 home, it's roughly $700 to $800. You'll see it as a line item when you close. I usually add it in the net sheet before we sell. But here's the heads up. As of early 2026, San Diego County is considering a proposal to increase this tax significantly. It is not in effect yet. It would need to go to voters first. But it's something worth keeping an eye on if you're planning to sell in the next year or two. I'll link a resource in the description so you can follow this. Question to ask your agent. Are there any local taxes or fees I should factor in when I sell? Section 5, 3 mistakes sellers make. Real quick, I want to share 3 things I see come up over and over again with sellers here in San Diego. Mistake number 1, waiting until your home is already in escrow to call your CPA. By then, it's often too late to do any real planning. So if you're thinking of selling in the next 6 to 12 months, that's the right time to have the tax conversation with your tax professional. Mistake number 2, thinking that buying another house means you don't owe taxes. That used to be a rule a long time ago. It's not anymore. Buying a home does not automatically protect you from taxes. The exclusion we talked about earlier, that's your protection, not the new purchase. Mistake number 3, not keeping records of home improvements. If you've done work on your home over the years, those records have real value. Even if you can't find everything, start gathering what you can and bring it to your tax professional. All right, so here's a free resource. To make all of this even easier, I put together a free cheat sheet. It's called the San Diego Home Sellers Tax Cheat Sheet. It has all the questions I just mentioned, all in one place. So you can print it out and bring it straight to your tax professional. It also has a simple checklist to help you figure out whether you might qualify for the tax-free exclusion. It's not tax advice, just a simple organizer to make that conversation easier. Completely free. Click on the link in the description below. All right, let's bring this thing home. Here's what I want you to remember. Most sellers don't owe any tax because of the $250,000 or $500,000 exclusion. If your profit is above that, California does tax the rest, so plan ahead. Home improvements can reduce what you're taxed on. Keep your receipts and talk to a CPA before you list, not after. Last thing, I am not a tax professional, but I am here to help you understand the real estate side of this. If you have any questions about selling your home in Chula Vista, anywhere in San Diego County, feel free to reach out. I'm happy to have a no pressure conversation. If you've missed last week's video on how taxes affect buyers, I'll link that right here also. I'm Corey Reels. Thanks for watching, and I'll see you next week.